Hi there. Welcome to this mini lecture with me. My name is Bo Lips, and we are talking today about two transactions which are made of a lemonade business. The balance sheet you are seeing today on the left is the beginning balance sheet of week 351. We have been accounting for everything as it happens, whether or not we paid or received any cash. The crucial method of accounting creates an accurate measure of a company's financial position even though the cash has not been settled. The transaction is made. We paid this fire insurance policy for 3 years from an amount of 36,000. The insurance is paid 100% in one go. There's also an option to calculate this insurance with a cash method, but since the lemonade business has an inventory, the crucial method is only useful. As can be seen in the balance sheet, there is a negative amount of 36,000, which decreases cash in debit. However, it increases the prepaid insurance expense, which is also located on the debit side of the balance sheet. Thereby, the amount of prepaid insurance expense is a plus 36,000 and the balance sheet is equal. Because the insurance is paid for 3 years and we just made the balance sheet of 1 year, that means we have to calculate the amount for 1 year. You have to divide the 36,000 in 3 years, and that has an outcome of 12,000 a year. Therefore, the income statement has a positive number of expenses, the plus 12,000, because it is added to the expenses. As an outcome of net profit minus 12,000, this is because it is a deficit. An insurance is counted as an operating activity because it is something that is required for a business to survive. As a result, insurance is paid 100% in one go and is calculated on the cash flow statement as minus 36,000, as you can see in the operating activities. This is the cash the business gave out and is therefore the net cash flow, and therefore the net cash flow is a minus 36,000 and is also a deficit. You may ask, why is the amount of the insurance here 36,000 instead of 12,000 as you have seen in the income statement? Well, we paid this year the whole amount of 36,000, so that was what we spent this year in cash. The meaning does not matter of how many years, for example. If you paid ahead or pay back something you owe before, cash flow accounts counts the money more the money you gave out or received in 1 year. Well, then we move on to the second transaction, and this is about the lemonade business, which paid back 250,000 to Rabobank from the business loan. Additionally, the business paid another 6,000 for the interest. First of all, having a loan of a bank is called a liability. As you can see, it is called on the liabilities on the notes payable. This is because the business owes money to the bank. Paying 250,000 back to the bank in name of a loan, it means cash amount will decrease with 250,000 from the assets. Next, the loan is paid now. The notes payable will also decrease with 250,000 from liabilities. Hereby, this amount of the balance sheet will be equal. However, the company paid also 6,000 of interest, which decreased the amount of cash, as you can see, with 6,000 and increases the amount of the current assets. Then we go to the income statement of the second transaction. The interest on bank loans is usually an expense of the accounting period in which the interest is incurred. Therefore, the interest appears on the income statement as non-operating expense and reduces a company net income. Hereby, the non-operating expense increases with 6,000, and as a result, the net profit decreases with a minus of 6,000, because it is a deficit. The loan amount do not appear on the company's income statement, because borrowed money is not considered income generated by the sales of the company goods or services, even though the loan made on it affect the amount of the company's cash inflows and outflows. And lastly, we move on to the cash flow statement. Since the loan of the bank and the interest is already paid in cash, the cash flow statement belongs to this transaction as well. There goes cash out of the company's income. Interest is paid with an amount of 6,000, what will be reported in the sections entitled Cash Flow from Operating Activities. As you can see in the operating activities, a minus of 6,000. The cash payments and the cash receipts of principal on a note payable are reported in the financing activities of the cash flow statement. Thus, the loan of 250,000. As you can see, the financing activities is a minus of 250,000 because the note payable is already paid with a cash payment. As a conclusion, the net cash flow ends in a total amount of minus 256,000 because this is a deficit. Thank you for participating in this mini lecture. I hope you like it and see you next time. Bye.